Which level is going to hold as support or resistance? There are multiple levels coming out in the market. There are multiple levels forming every step of the way. So if the market breaks a structure, where is it going to retest exactly? In this video today, I'm going to be teaching you, or I'm going to show you which levels you should keep an eye on, or the high probability zones that you should buy or sell from. Because when the market moves in structure, it breaks new highs and breaks new lows and forms new levels. So if the market breaks a structural level with impulse, there's supposed to be a resting zone where the market should come back and bounce off of it before continuing in its original direction. So what are the confluences and what are the reasons that will make that zone different from the other one? In this video, I'm going to show you so that you should stop picking the wrong zones to buy or sell from. Stay tuned. Okay, guys, thank you for clicking on this video. My name is Kislen, and here we share forex ideas. So here in this right here is a tool that I use to illustrate what I'm trying to explain here. So let's assume that the market was the initial trend was a downtrend and the market was forming lower highs and lower lows. Okay, now let me just put something on the screen real quick and demonstrate what I'm trying to explain. So we can see that this high here took out the previous high and the previous low. It swept any inducement that was left there. Then the market broke this, changing character to the upside, telling us that this market is about to go bullish. Then now the market starts retracing. Now this is where the big question comes in. Which of these levels are we going to take? Remember, guys, we're trading support and resistance. We're trading break and retest. Okay. But now we are incorporating the smart money concept so that we can maximize our gains and maximize our profits. Because if we imagine merging these two concepts, price action and SMC, smart money concept, putting them together is going to give you high probability trades. So this right here is a zone. Okay, this right here is a high that has been broken. Then this also is another high that has been broken, and you're planning to catch this trade. Where are you going to enter this trade? 2 seconds. Okay, if you picked this zone, you're wrong. I'm sorry, you're wrong. It's possible, but you're wrong because this is not a high probability zone. It is a correct zone, but it is not a high probability zone. This video is about high probability zones. This zone, however, is the high probability zone. Because if you draw your fib, you see that this zone is at the perfect level to buy from. No questions asked, no debate. Okay, this zone here is preferable to buy from because it's like 50% of this move. But that is not even the fib will not give you accurate results, guys. The reason why we're taking this high here, why, is because this high swept this previous high. You understand? It cleared liquidity there, cleared liquidity to the downside as well. Let me break down structure for you guys. We have a high, a lower low, a lower high, a lower low, broken this other low. There's also a break of structure here. I want to explain why that level is very important. So now we know that this market is going down. Okay, so which guy exactly indicated, or which guy changed our market structure? You see this low, it put out this high that took out the previous high, changing character to the upside. Then came down again and broke structure here, changing character again to the downside. Do you understand? So all of this here is inducement in the market. This is liquidity sweeps. These are inducements that this low has taken out. So if this move here from here swept this previous high and swept this previous low, this is the high probability zone because this high is responsible for the lowest low in this market. In simple terms, this high is the high probability zones because it is responsible for the lowest low in this market. It is responsible for the break of structure to the downside. The last break of structure to the downside, this guy is responsible for it. So when the market breaks it, there is no doubt that the market is coming back to this, okay, to then continue its way up. You leave from here now and break structure again to the upside. And when you break structure to the upside, and let's say structure breaks to the upside and does something like this, it bounces off this zone a bit, then comes right here, breaks this high, then breaks this low again, and breaks that high back to the upside. Okay, where is your high probability zone? Now you're looking for a retest. You're looking for a retest to continue buying this market. Where are you going to trade off of? Are you going to draw this one because it has been tested twice? Yes, it's good. You can draw that one because it has been tested twice. Now, what about this low that has broken this zone? What about this low that has swept through this zone? What makes you think that next time the market will not just crack through that zone? Okay, now, however, look, keep an eye here, guys. Keep an eye here. We have this high here, but this high is nothing because this has already been broken by who? By this guy. And this guy also broke the low that put out the highest high in this market. This guy broke this low. Do you understand? This high is responsible for the lowest low in this market. It's responsible for the low that broke the previous low. So this high has to take out the previous low to be the high probability zone. If they are both equal, then you put you draw your zone on top of the two highs. That's perfect. Okay, let me write something real quick on the screen so you can you should understand what I'm saying. Okay, what I'm saying is the high probability zone, the high probability zone. Oh, my keyboard, guys. The high probability zone should sweep previous low or high and then break structure. What did I say? The high probability zone should break previous high and then break structure. So if this market breaks this high, this is the high probability zone because this high is responsible for the lowest low in this market. This guy is responsible for this low. This low is deeper than this low. So that's why this guy is high. Is very, 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 very important. Same thing happened here. Okay, guys, let me delete all of this and show you on real charts what I'm trying to explain here. Okay. Now this is candlesticks. Let us zoom in. Look at this pattern here. This is a downtrend, right? You see the market forming lower lows, lower highs, and lower lows. Guys, if you look at this, you're going to see that we have a high here. It pulled back down here, then broke structure to the upside. After breaking structure to the upside, this market broke structure again to the downside. It swept all the liquidity here. This is liquidity. These two lows right here, this equal lows here is liquidity. This is liquidity. So this high here has broken structure to the upside, then swept liquidity to the downside, sweeping every limit, every stop loss that's down here has been swept by this high. This guy is responsible for that. This guy did it. So if this market breaks up, since that's the strategy we trade, we are trading but break and retest. Okay, what we want now is for this high to be broken. And if this high gets taken out, what are we looking for? We're looking for a retest of this level to trade off of it. Not this one. Not this one. Of course, we're looking at this one. The market never got back to it. It didn't touch it. It did not. However, it touched this one. And this is how I draw my levels, guys. I draw my levels and I keep it on the candle close, not the wick. I keep this line specifically on this candle close, not the wicks. That's where the price last closed before going down to break structure. Okay, the price opened here and closed here. That is why I keep my levels. And these are specific price points where the price comes back to retest. Look at this tap here. Perfect. Look at this one. Perfect. Look at that. Okay, let's take on another example. This low, this high has this low has broken this high. Then has put out a new low. Then this new low now has taken out the previous high. Then this high now that has been made, this new high has broken again the low that made. That means you've broken your maker. So you are now the maker. This guy made you. This low made you. And you broke your maker. So you are now the maker. So now this is your new boss. This guy is your new boss. Look at that. Look at that. Go on your laptop screen, your computer screen, your phone screen, whatever screen you're using. Go on that screen. Open a chart. Okay? Open a chart. Go on a 4 hour or even 1 hour time frame. If you watch my videos, you know I'm fond of the 1 hour. I mean the 4 hour. I mean that's a golden that's a golden time frame. That time frame is crazy. Do you understand? This is it. This is why. Traders come and be like, I'm taking this one. Yeah, great, nice. Yeah, you can take that one. But the price never got there. The price never got there. And there's high chance that if the price breaks this important high that I've shown you here, this high probability zone here that I've shown you, this high, this particular high, if the price breaks it lower, there's high chance that the market will just come back and retest and continue falling. Because this guy is that's the VIP guy. He's the boss because he killed his boss. So now he became the boss. You feel me? This low made him. And then he came and broke that low and made his own low. Lower than that low, meaning he's now in charge. So this high should be retested. And that is exactly what happened. I don't know if you're understanding, guys. I don't know if you're understanding. I want you to go on your chat and try to, rewatch this video. I might not be speaking really good. My English is not really good. I'm from a bilingual country where we speak both French and English. So English is not really my language. Yeah, so I want you to watch this video again over and over. Try to, pinpoint these levels. If the market breaks and you see multiple levels, what I want you to do is look for the high probability low. Let me show you one here. Keep an eye on this area. This is what I want to work on now. This zone, this price action here. Let's assume that we open the chart and that's where we are. This is where current pricing is. Now, what we are looking at is this. Let me ask you a few questions based on what you've learned. We have a high, we have a low. We have a higher high that broke this high, that broke this one, right? This high here is responsible for this low, right? We put it on. The market comes back, retest it and go. We forget about that one. I'm not even looking to trade this one. The price here is not looking good. When you see impulse, when the market breaks a level with impulse, you know that it's high probability zone. It's good because there's volume in the market. When you start seeing this kind of consolidation, like, ignore it, guys. So we have price action now to the top there. If you look at it, you see that this low made a high that is higher than the other previous high there. Okay, let me arrange my chart so that you can see it. Maybe you're not really. Let me zoom in a little bit more. Okay, I'm very sure you can see now clearly. Okay, you can see now that this low here, this low is responsible for the highest point in this market. This guy is responsible for this low. It's responsible for this high because this high is the highest point. If you look here, there's no other high that's higher than this one. This low is responsible. This low did it. This guy did it. This guy did it. If you stretch this level across also, you also see that this level has also been tested here. But that's not what we're looking at. That's not what we're doing because every level has a point where it has been tested one way or the other in the market. But what we're more interested in is this zone, this particular low here, this one, because it's responsible for the highest point. So if the market breaks all of this, the highest chance of the market coming back to retest is that low that broke the structure, that low, that boss. This is the boss. Let me call it the boss because he's the tallest. He's the one responsible for the highest mountain in the forest. He sees everywhere. So if that mountain is broken, they'll come back to retest the boss, this guy. So you see it here broken, came back. People will be selling here and be like, retest. If you go on a 1 hour time frame, probably maybe you get like a black candle there and you enter, you take a loss for no reason. This break is not even good enough. You cannot see one candle break and you're anticipating a retest. Now, it should break. You should see that it's broken clearly from a distance. And this is called a break of structure. This is a clear break. You look at this, it has broken this neckline. Now the market gradually pulled back in. People will be selling here. Now let me tell you now why you cannot sell here. This is a zone. This is a level, right? This is the price we're testing here. But it failed. It broke here, came here, retested it a bit, went down for a little, came back again. People will be selling here. People that sold here, if you sold here, maybe you would have gotten some money, but I will not sell here. Why? Because I need to see a clear break of this level. If I'm to sell from this level, I need to see price go down. But if the price has ended like here and then come back to retest, I'll not take. Then you see now this retest here, people will be entering here. This is not a high probability zone. Where is the high probability zone? The low responsible for the highest point in the market at that time, at that period. This guy is responsible for this high, this week, this candle here that went up all the way up, broke this level. This guy did it. So this guy is responsible. So if you take your trade from the high probability zone, you take an engulfing candle confirmation on the 1 hour. After identifying this, when the market enters there, you go on the 1 hour and wait for an engulfing candle to reject this zone. Then you take your nice 1:2. I always take 1:2, but if you're looking for these lows, these previous lows here, you can look for it, and that's it. 1:4. We take that and we leave. If you put me anywhere in the market, I will tell you exactly how it goes. If you watch my previous video, I predicted the price. Majority of the pairs that I predicted there went exactly as I predicted. Go and watch my videos. I go and look at those pairs now. All of it played out very well, and I took a few trades from there. So this is where the video will end, guys. I hope you've understood what I've told you. High probability zones, zones that are responsible for the highest or the lowest points in a market or in a trend. Okay, I've said my own. But even if the zone didn't really break any structure to the upside, but the low has been taken out impulsively to the downside, you can look for a retest there. It's perfect. But if you're contemplating there are way too many lows, if there's more than 2 lows or more than 1 low in the market, look for that low that is responsible for the highest high. That is a low you have to trade. But if there's only 1 low that has been broken, like this one, let's just assume that this is the only low here. We don't have any other high like this one or this one, because you see here we have a high here. But let's just assume that we didn't have any high here, and this is the only high we have, and the market has broken. We'll buy from there, no problem. But if we have way too many highs, like 1, 2, and the market has gone, we are contemplating, should we buy here or should we buy here? You are confused. You are confused. And you should not be. You should not be. So yes, go and practice this, guys. Go and backtest this. If you can backtest, you backtest this. Try it before you start trading real money. This is no financial advice. Once again, my name is Gislen. If you've watched the video all the way to the end, therefore you are amazing. Please subscribe, like my video, and support me. Thanks for watching.